What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief. It's quiet out there in the markets today, almost too quiet. And sometimes that quietness can lead to complacency. We're going to go over some charts today, kind of give some ideas as to what's on my mind. I'm getting out the video earlier, and I want to keep it short today. Before we hop into today's episode, I want to thank now the 504 active patrons. We now have that Discord up and running, so if you are a patron, make sure to get Discord connected, because it's important. That's where I send out my live alerts, and that's where we have all the community where we post some swing trade ideas, and it's just a really cool thing, and it's currently being built out right now. It looks really neat. We have two different tiers on the patron group. We have a support my work for $4. This really keeps me going. Same with the $9. The $9 one gets you a little bit extra. The included benefits include Discord as well as my trade entries, some quality setups that I post daily. For the most part, as long as there are some daily setups for $9 a month. I mean, honestly, I've been already told this by a bunch of people. You charge way too little for what it is that you do. I put in a lot of work for $9 a month, just so you know. And I've looked at other pricing for specific alerts and then setups, and they're not even posting videos. They're just posting charts without really information. I mean, I'm seeing from $100 plus to $1,000 per month. So $9 a month, it's pretty cool. In my opinion. I don't know. Maybe I'm overselling it. Let's hop into today's show. All right, welcome back. First, I want to start off with the dollar. Okay, going to talk about a couple of things here. Dollar, we talked about this. Falling wedge, rising wedge here in the S&P 500. The chart didn't update because I'm recording earlier than usual. Decent day to the upside. That's what the candle looks like according to the data that I saw. So it's going to probably fill in like this. We're trading right around 90, but still within this technical pattern. Now, if we start breaking out, this is where I've been getting that idea where, okay, we broke out of this rising wedge, maybe we go back test and then head a little bit lower into June, and then we find a bottom and then we rally higher. That's just an idea, but we'll talk about that, why I expect that in various other charts. Now, the NIAM, I believe that this data now just got updated here as of Tuesday. I believe this data comes out. What are asset managers doing? So there's two ways to look at this right here. First off, still foot off the gas for asset managers right here. Typically they're up in 100, they're leveraged, we're pushing, right? It's a relatively low reading as the right X is still pretty bullish right here too as well. But what does this mean from a bullish perspective? Well, from a bullish perspective, well, actually let's start with a bearish perspective. From a bearish perspective, it says that asset managers, people handling big bucks, right? They're saying, taking the foot off the gas right here at the moment. Let's see what happens. However, from a bullish perspective, this allows them to pile back in very quickly and even get on the leverage train, which means there could be, like I said, that fits the dollar script is, yeah, potentially some more downside into June. However, it could pack a punch as soon as they pile back in. You can see that here. I mean, that was a very dramatic example. But the pack a punch can move it, moves down, packs a punch, moves up, moves down, packs a punch as it moves up. So that is a possibility. It's just on my mind. Looking at the market dashboard, look at very calm day today. Not much to point out here. I do like seeing energy kind of creep up. We'll go into the oil chart here soon because I am seeing a lot of consolidation in the energy space, and it'd be very nice to see a breakout here very soon. Let's hop into the IWM first. I redrew this out to potentially be a little triangle, perhaps. We did crack above the 20 and 50 day, but I don't think you got to hold too much weight because we're still relatively in a chopping range. So not much to report there other than that. And then also the price percent oscillator crossed over to be bullish. 15-minute perspective, we did get above this resistance, 323, but just be mindful that it's a zone. So we're still technically right within that zone. Got a little bit overbought there. We're taking a little bit of a breather right here. Once we get into the S&P 500, I'll get into the VIX and kind of give you a more broader picture as what I expect to see. The BKX, this probably helps significantly for the IWM because it makes up a big portion of the IWM. The Russell 2000. We just pretty much ramped up today, but this could very well be a bear flag. So I wanted to call that out as we broke down this falling wedge, and then now we're creating another bearish pattern. So we'll see what comes from that. S&P 500, let's start with the VIX. All right. We called out this bear flag yesterday. What do you know? We came down, we started moving pretty significantly, right? And the markets relatively were pretty flat, okay? this is kind of what I'm thinking. I've been seeing some various stocks start to squeeze higher, start to press higher, and that's a great thing. If you're in those stocks to be long, that is. If you're short, then that kind of sucked. My guess is that it's a lot of unwinds taking place as hedge fund managers are probably heavy into short positions, and now they're starting to unwind, and we're starting to see some pretty aggressive moves. What I want to call out here, though, is the VIX being back down below 30 on the RSI. Typically, when you get down there, you could see a bump. Now, today's Wednesday, tomorrow's Thursday. So if we go up tomorrow, that sets itself up for a VIX crush Friday where we head back down. So I wouldn't be surprised to see if we get some sort of gap up in the markets that we start seeing some selling pressure in the early day. And that could potentially continue as the market continues to consolidate, because there is no technical bad structures taking place here. But just take note, once again, if we come into these areas and you're long, it's probably good to start looking for profit taking in some of your positions. And then as far as going long, it's always nice to go long if we get a big spike in volatility that brings the markets down, and you can look for various setups from that point. The SPY on the daily time frame, you can see here, I'm pretty sure that was just an inside trading day. So it's just moving sideways. We'll see what comes from it. As already stated there on the VIX to watch out for, but nothing really to call out. Still bulls advantage above the 20, above the 5, above the 50, above the 100, above the 200 day moving averages. From a 15-minute perspective, we broke down from this. We broke out of this rising wedge, which is bearish. We held the support though, and now we could be forming a symmetrical triangle here. We still have resistance right around 421, in some change to 423, that zone. So what does that mean? This is where I find it interesting. If we get some sort of gap up tomorrow and this brings it into even more oversold in the VIX, and we close potentially one of these gaps, as we run into resistance here, that to me says, okay, so that might then take a little bit of a breather from that point and then potentially head higher if we get that VIX crush Friday. It's just a narrative of mine, and I don't really focus on narratives. I want to focus on price action, so we'll see what takes place. But that's just to give you kind of a roadmap as to potentially what could take place. NASDAQ hasn't done much today. Now, they're just pretty sure that was an inside trading day. I can't really see. We'll zoom in here shortly. I would like to see this take a little bit of a breather back down into the 5 EMA, 50 and 20, and then potentially continue its path. This was a pretty big move here, right, from 315 range in the last 4 or 5 trading days kind of up. So I would expect it needs to take a little bit of a rester here soon. As far as the 15-minute time frame, range bound, breaks out of 335. We have some resistance at the previous swing high up here at around 337. Breaks down from this, we might come to fill this gap, potentially come test 327 again as support. The semiconductors, they make up a big portion of the NASDAQ. Pennant pattern forming here. If we break out, I think we go to fill that gap. We still have a big bar right here of volume, so there's some resistance up ahead up there too as well. But this is a pretty aggressive move, like just a lot of chop in the markets. You can see here from the 19th, 224 up to 247 very, very quickly, so it's consolidating. If we break down through 243, I think we would take a little bit more. We need some more time to consolidate, and then we could potentially ramp up a little bit higher. But as it stands right now, sideways action in a nice little pennant formation. Let's look at the Dow Jones daily time frame. This one was still slightly up on the day. Nothing to really report here as of now. Very quiet day. Still, let's see if it has the 5-period moving average. So the 5 EMA is at 34273, 34323. So we're just slightly above all the moving averages there on the Dow Jones as well. As far as the DIA goes, could be a potential little flagging pattern, falling wedge right here. Something to keep an eye on if we break down through this. I think we'll have some support right at around 341, this gap fill area, and we still have this overhead resistance from 345 to around 347 to that gap fill. Keep in mind, there is not too much trading volume just overhead. So if we break out of this, we could see potentially a bigger spike. Just like actually really what we saw right here. So we'll see, but we do have some resistance, 347 if we close that gap. So just be mindful of that. And then let's go into the transports. It's important to watch that too as well. We broke down from this rising wedge or potential bear flag, and we are now just kind of ramping up higher. Could be going back to test this trend line again, as we did once already. Could be forming a potential bear flag right here too as well. The RSI, it's moving pretty quickly to the overbought territory. So, if we get a gap up and it goes to overbought, I would expect a little bit of a sell-off to consolidate and then maybe head higher. Or if we crack down through this low right here, I would say that it's going to probably fall down to around this previous bottom right here and then test that support at 15,325. All right, let's hop into a couple commodities. Only going to keep a couple on here. I wanted to talk about this. We talked about this on my last just gold video. It was a sponsored gold video, and I talked about research done by Tom McClellan, and it was the 26-day trading cycle. And I wanted to rebring this up here because we are coming in to the 26th day, and sometimes on the 26th day you get some pivotal moments, as he pointed out. He's unsure why, but it's typically something takes place. And as you can see here, that was the 26th day. We moved down. 26th day, we headed lower. 26th day, we moved higher. 26th day, big turning point. And you can see that now, and even right here. Now we're moving into the 26th day on a pretty big ramp up. And I've been saying, one, that we're overbought. Two, something seems like it needs to take a little bit of a breather here. So as we're coming into this, maybe that's our turning point where we head a little bit lower, take a little bit of a breather. I would like to see it hold. This trend line at least, above 1840. But we'll see what happens if it does start heading lower. So just be mindful of that. Oil, black gold, I would like to be seeing this one break out, obviously, so then we get to see some strength in the energy stocks. We had this little fake out right here. Could be considered a fake out, but then it quickly recovered, and we've been just trading sideways. You look at this is a continuation type pattern in bullish context. Typically what you get when it breaks out, you get some more continuation. That would be in the bull's favor. Let's see if that is what happens. We still have been testing this range and we haven't got there yet, so it looks like it's trying to just really coil up and create some energy, no pun intended, to potentially here break out. So we'll continue to monitor that. As I am seeing a lot of energy stocks consolidate sideways, some oil stocks, and they look really tempting to be getting into. If you're in my Patreon group, you already know that because I've talked about them yesterday in Trade Ideas. Let's talk about the conclusion. I'm going to actually go through some sectors here, just so you can really kind of also visually see just a lot of sideways chop, a lot of indecision taking place at this particular point in time. It is a stock picker's environment. As you can see, we're seeing some very strong gains in individual stocks, but the markets are just at pause right now. So relative rotation graph, looking at a 5-day swing, you can see weakness, XLE, XLB, XLF. I believe that's the XLF. I can't see that. I'm almost certain. And then we have technology here on the short-term basis improving and getting some strength, as well as communications. Okay, so I wanted to quickly look at XLE from an absolute perspective. We are pulling into a 5-day declining moving average. It would be nice to overtake that. This to me says it might take a couple of more days, perhaps, to start seeing some strength to head up higher, or to decide that it wants to head up higher. You could potentially call this a cupping pattern, cup, handle, but you can see that there's a little bit of a supply zone right around 50, 54. Now, XLF financials, they're still holding strong right now, so that's a good sign for financials. We're above the 20-day period moving average, and we pretty much closed flat on the 5 EMA, which is flat. The 5 EMA is flat as well. Overall, the moving averages are in very bullish context here too as well. Could be forming a little pennant pattern. So we'll see if it wants to continue to consolidate or if it wants to start taking out that $38 level. XLU, this one is that bull flag we called out, which is more defensive name. So if we start seeing this breakout, that might not be the greatest thing for other individual stocks. It's more of a risk-off environment if we start seeing XLU strength, especially from a relative standpoint. But you can see here it tagged the upper trend line. I didn't draw it, but it tagged this upper trend line. We're starting to see some weakness. Still have the 20-day, but now the 5 EMA, still have the 50-day moving average, but we have a 5 EMA that is declining, and also the 20-period moving average is declining as well, as we are priced below that too. So this is a period of consolidation. I wouldn't be entering in at this particular point in time in any utilities unless we start seeing some strength there. XLI industrials, also sideways chop for a week or so. Pretty much since the month of May, came to a high, came to a low, right back in the center of both of those. But overall context, still bullish. We're above the 5 EMA. It's slightly moving up, above the 20, above the 50, above the 100 and 200 moving averages. Price percent oscillator is over here, trying to cross itself back over to a bullish crossover, which could set up some good opportunities in the industrial names. And then the last one I want to talk about is technology. Technology did go for a pretty significant run here. This could be due in part because we've been seeing, obviously, this big move to the downside. We could be seeing some unwinds take place where we get individual names press significantly higher. I would like to see this take a little bit of a break if it wants to move higher, pull back down and then head up, just as we talked in the section of the Qs. It is pulling into this little previous zone of supply. You can see here 141 and 143, this zone up here. as we previously came up to those levels and sold off. So, stock picking environment, everybody. Be careful out there. Hope this helps. I will talk to you all later.